in our top business story, the International Monetary Fund has approved a $723 million loan facility to Jordan in a 3-year program to support economic and financial reforms aimed at lowering public debt and accelerating growth. The IMF said in a statement that the first $723 million tranche was to be paid immediately, and the remaining amount would be dispersed over the duration of the program. The deal is focused on reducing public debt to 77% of GDP by 2021 from 94% now. Debt rose to almost a third, to $32 billion in 5 years as economic strains reduced revenues and foreign aid, forcing Jordan to borrow more. The program comes almost a year after the conclusion of a 3-year, $2 billion standby deal that stabilized the economy after the strains brought on in part by the higher spending. The IMF program envisages a gradual recovery in the growth rate of real GDP to 4% by 2019. Growth is forecast to reach 2.8% this year, a slight increase from 2.6% in 2015. Almost 3 in 4 investment professionals are confident that Dubai will not suffer as a result of Britain's exit from the European Union. According to a survey by CFA Institute, which is an association of investment professionals, 71% of its members believe Brexit would not impact the Emirates' place as a global financial center. From its survey of 2,043 respondents across the EMEA region that was taken to gauge the likely potential outcomes of a British exit from the EU following the referendum, 58% expected the Middle East firms to reduce their presence in the UK in wake of Brexit. The survey also found that 10% believe Middle East companies with significant operations in the UK would seek to expand in the kingdom. UK fragmentation was rated as likely by 59%, while more exits from the EU came next with more than 48%, while just 26% thought it was unlikely. Half of respondents expected firms from their local markets to reduce their presence in the UK, while just 5% said this would increase. About 82% of respondents expect London to lose out as a consequence of Brexit. Housing rents in Abu Dhabi fell 2% in the 3 months to the end of July as a global fall in oil prices continued to bite. According to new figures from the property data company Redin, average rents fell 0.61% in the month of July. Rents in the capital now stand at the same levels they were 2 years ago and about 1% lower than a year ago. Redin, whose data is used by many of the big property brokers in the UAE, such as JLL and CBRE, said that average rents in Dubai fell by a similar rate, down 0.62% in July and down 1% during the 3 months. Unlike in Abu Dhabi, rents in Dubai have been falling for the past 2 years and now stand 4% lower than they did a year ago and 5% lower than they were 2 years ago. Last week, data from property portal Bayud.com found that asking rents for the apartment listed on its website in both Abu Dhabi and Dubai were falling steadily. Consumers in the UAE are expected to refrain from splurging during Eid Al Adha after having increased their spending on new clothes and gifts during Ramadan and Eid Al Fitr period, according to retail analysts. With the holiday period running for up to 5 days, Eid Al Adha is a time when retailers roll out discounts and malls feature attractions such as musical performances and cultural exhibitions to draw in customers. Research analysts at global consultancy Euromonitor International anticipate that retail sales during Eid will grow at a lower rate compared to Ramadan and Eid Al Adha last year. According to the consultancy, consumers are likely to cut down on spending after increasing their budget during Ramadan and Eid al-Fitr, which fell on July 6th, around the same time as Dubai summer surprises. Consumers are expected to spend mainly on food and entertainment during the holiday, rather than apparel. Meanwhile, consumer confidence was down in the first half of this year, mainly due to the drop in oil prices and concerns over the global economy. During the first half of this year, the UAE's retail sector was slower in the first quarter of the year, while growth picked up during the second quarter, influenced by timed purchases in Ramadan, Eid, and summer holidays, which led to growth of luxury apparel, home furnishing, and grocery items.